Hey guys, we have a very exciting video for you. The Chime IPO is occurring today, so I wanted to take this opportunity to not only talk about the Chime IPO, but in addition to that, give you a nice head-to-head comparison between its fierce rival and Sofi, guys. So we're going to talk about, Sofi versus Chime, but in addition to that, we're going to talk about that Chime IPO. So the Chime IPO is coming out today. It's coming out between 12 and 1 p.m. typically, right? And it was oversubscribed, so originally the share price was $24 to $26. It did bump up slightly, $27. So that's a good sign that there's not only institutional investment opportunities, but also, retail investors too. It's good to see both sides playing their hand in this situation, which is very good. Very good indeed. This should raise about $800 to $832 million, so a pretty solid raise on their part. The CEO and founder guy is still going to have 65% of the shares in this company, thanks to that dual class share situation. So he's essentially giving out 35%, which is fine. That's pretty standard. That's a decent chunk where retail investors can still participate and institutions can still participate and feel like they have their voices heard. And that's important. If you go public, you can't just give a couple of shares. You need to give enough for the retail and institutions to feel like they have a say, but at the same time, you don't want to give them overriding say on you. It's more of an advising situation, if you ask me. So the valuation comes in at about $9 to $11 billion, guys. So pretty good, but I must say, only a couple years ago in 2020, 2021, they were worth $25 billion. And then what happened is COVID hit, their revenue went down, their net income went down, profitability went negative, and all that stuff like that. It's not a company which was just profitable in the most recent financial quarter, which is good. It's good to see them come back to profitability. They kind of break into the positivity again, but you have to keep that in mind that although in 2024 and into 2025 their trailing 12-month revenue is up and all that stuff, and it seems like they're going in the right direction, you do get concerned about how cyclical the business is, because it looks like in these downswings the company is experiencing drops in revenue. So that means the business is not as diversified as something like Sofi. In Sofi's case, right, they have that loan origination business, which is generating billions of dollars in gross revenue, not net, but gross revenue before they pay everybody out and stuff like that, which it still helps the bottom line. You have that, you have the credit card, you have Sofi Invest, you have Sofi IPOs, so you have other aspects of the business, which leads to a nice little gradual increase over time in financial performance, no matter what the situation is in macro. So it's good to see that from Sofi, but Chime doesn't really have that, and they need to work on it. They have this credit building program these days, second chance banking, which is nice as well. Overdraft protection. They're trying to, but they're more of a pure play neobank, while Sofi is becoming more of a diversified financial institution. Sofi appeals to older demographics with more money, lawyers, attorneys, stuff like that, with school debt, but people with high income prospects, which will probably pay it off over time, while Chime is more for that underbanked community, the lower socioeconomic class of people. So these are things to keep in mind, the differences between the two businesses. So just keep that stuff in mind, guys. So right now Sofi is about $15.06 per share. Sofi is coming in at about $20 billion in kind of the market cap of the company, while, like I said before, Chime's about $11 billion. Although keep in mind, Sofi has about 1.1 billion shares, guys. So they are diluting like crazy. There's been a 13% rise in the past year. Obviously, they're growing too, so you like to see the bottom line and the top line growing. So they're doing everything perfectly, but they're using these stock-based compensations, SBCs, stuff like that, to pay for that growth in a way. And I don't like that. You want to see holistic organic growth. And seeing SBC going up so much at a company that's over 1 billion shares already, it's a little bit concerning. So Chime only has about 336 million shares. The IPO offering is about 32 million shares, so pretty solid stuff. So these are all things to keep in mind. Ally Bank, which has 11 billion in revenue, which is about 30 a share, does not have nearly the number of shares as Sofi. Ally Bank has like 500 million outstanding shares. So there's stuff to keep in mind, guys. So to go back to more of the head-to-head between Chime and Sofi, the trailing 12 months for Chime is 1.67 billion, while for Sofi it's 3 billion. So you can see there's certainly a large increase there. Member base, there's 8.6 million monthly active users is called MAU in the business, MAU. So that's kind of like the metric they use in the business. While for Sofi, they have 10.9 million members. However, they don't consider active members or non-active members. They just say members, which leads me to believe that the inactive member count is probably higher. Let's be honest. So the member count is probably pretty close. That just means Chime really needs to monetize better. That's what it sounds like to me. And this is something outside advisors and IPO consultants, and because you have Goldman Sachs underwriting this, so I do think they will be able to help out with those type of things, right? In terms of profitability, guys. They are losing money over the year. The trailing 12 months is about $28 million over the past trailing 12 months. Or Sofi, $71 million, right, in the past 12 months of net profitability. So things to keep in mind, guys. Yes, they were profitable the most recent quarter, Chime, but they're still losing money over the trailing 12 months. So these things are very important to keep in mind, guys. Very, very important. So now time for my overall opinion on the company, guys. I do think Chime in this market right now, which is pretty much a bull market with that low outstanding share count and a more focused business on banking, right, and less diluted business. I do think it'd be very interesting in the future to see how these two compare. I do think in the end, Chime will probably in the short term get a higher share price just because of the lack of shares compared to Sofi. But long term, I do think Sofi will continue to execute as it has and cause a longer share price over time. But I must say, guys, me personally, the banking business, the banking industry in terms of the stock market has always been terrible. Always, because when you loan your assets out, right, and you get fee-based income, right? Fee-based income is never going to be something that's valued in the marketplace. Whether it's Oscar Health blowing up on its company, but it's only $15 a share, while United Health is $300 a share. I mean, for many reasons, but also because that fee-based income is just tough. It's tough because basically what that's saying is like it's just you're just being treated like a bank, and banks don't get that same growth as, let's say, a tech company. And Sofi wants to be a tech company, they're trying to, but the one thing that's stopping them is Galileo, because Galileo is the tech platform. Anthony Noto called it the AWS of tech only a few years ago. And if you look at the most recent quarters, Galileo is unexplainably losing members, guys. Yes, they are losing members, and then people wonder, why is Sofi only considered to be a bank multiple? This is why Galileo is losing market share. And I know they're talking about getting Marriott and all this stuff in 2026, but why does it take so long to integrate them? Maybe you need a new guy running Galileo, because why do you need so much time to integrate something? Why does it take 2 years? Do it faster. There's no excuses. Do it faster. Come on. This is the public markets, guys, and time is money. And opportunity cost is a real factor. So why am I going to buy Sofi knowing for this year that, first of all, they said their EPS growth is going to be kind of bad the next few quarters, and we know that Galileo won't be adding members, which is the only thing that will give it that multiple until next year. So why touch it, guys, when there's better opportunities this year? And that's my problem with the banking sector. But I'll do some swing trading on this Chime IPO just because IPOs tend to go crazy and maybe people like Chime more. Maybe people just hate Sofi. I don't know. But that's my opinion on it, guys. Let me know down below what you think. Like, comment, subscribe, favorite, put on notification bell. Please turn off the Adblock. That stuff really supports me. And yeah, that's just my opinion on the company, guys. Check out my website, pbosonline.com, to see this video and every video I've ever made without any ads. So I really would appreciate it. And check out my Amazon link down below to buy something cool, and check out Robinhood.com and use my link to sign up, and we both get free stocks. Thank you. Bye.